In this easy to understand trend following strategy, we are using exponential moving averages to determine the trend and volatility of the market. We use a combination of 100 and 200 moving averages to create a zone we look to enter into. Looking at an hourly chart on NQ, we see a clear zone in both moving averages. This zone is the area at which we will be looking to enter into the market or begin initiating a position. If price is trading below both averages, as in this example, then we simply wait for a retracement back into the zone in order to enter a trade. Price trades below both averages for some time, creating a divergence between them. The market eventually retraces back into our entry zone, and it's at this point we begin looking to enter. We can use a variety of different confirmations to enter into the market. Some of them include candlestick patterns, divergence, or reversal patterns such as double tops and double bottoms. A very productive way of taking trades in this zone is to use the level 1, level 2, or level 3 entry. Before backtesting any new system, you should take note of a few things, such as how long you will be able to trade for. If you can only trade 1 hour per day, then a scalping strategy may be better for you since you have limited time in the markets. It's basically trying to figure out which style works well with your personality too. Trend following may not suit everybody. It does require a greater degree of patience compared to other systems, so developing a more patient outlook will be advantageous. And then to also take a look at what markets behave in the best way to suit your trading approach. In the pullback EMA strategy, we need markets that are more inclined to trend than get stuck in ranges. If I take a look at the chart right here, I've opened a 15-minute chart in the YM, which is the Dow futures. Our moving averages are flat and the price has been stuck in a range for a long time. This is the type of market environment we need to avoid if trading the pullback system. Now if we switch to an NQ chart on the daily, we see a much different picture. This price action is clearly trending and we have a clear zone between moving averages to take our positions at. This is the type of market movement we want to capitalize on when trading any trend following strategy. In this example, we're going to take a look at the level 1 entry. Level 1 entry is the riskiest of the 3 entries that we have because when we look for our first pullback, we want to see the price retrace immediately off the moving average zone. The difference between the level 1, level 2 and level 3 entry is that in the level 1 entry, the same thing will apply in terms of we need to see a divergence between the two moving averages as we see over here, and then we're always going to try to look for the first pullback to take our signal. In this situation, we see that the price comes back and tests the 100 moving average right over here. Okay, we're looking at this candle. If I zoom in a little bit, this is the first candle that touches the 100 exponential moving average. So at this point, what we do is we mark the high immediately. Okay, so we take note of the high. Now, when we get a break above this high, or even better, a close above this high, we want to take our long position, but only if the next candle closes right above it. So we wait a little bit longer and we see that now this candle has not broken our high, so we move our line down to the high of this candle. Now if we see the next candle break above that, then we want to take a long. We wait another 15 minutes because this is the 15-minute Nasdaq chart, and we see that we actually retraced into the moving average zone and formed a doji, but it still did not break above the high of this candle that we marked. Okay, so now what we do is we move it one more time down to the high of this candle, and then at the break of that we take our long position. So as I said previously, this is the level 1 entry and is the riskiest of the 3 entries. So if you notice that the market is trending strongly in a certain direction, you'll find that this way of entering the market will be more successful than any of the others. For the level 2 entry, we keep the same criteria in mind in terms of needing the price to move above the moving averages for a certain period of time in order to create a divergence between both of them. We also want to try and look for the moving averages to be angled in a certain direction. If we see that the moving averages are flat, we may want to wait for a breakout or some sort of trend before we start looking to take these signals. So the difference between the level 2 and the level 1 entry is that we are taking note of the very first candle only. So the first candle that comes back and touches the 100 exponential moving average, which is this one, our original candle, We are going to mark our high and we're going to leave it there. There's no moving of this line at all. And at this point, we're now placing a stop limit order above this, or you can wait for a close above it to take the long position. So the only difference with these two strategies is that the level 2 is waiting a little bit longer for a confirmation. So in this case, we may have higher win rates, but because we're going to have a wider stop loss, we're going to have it even out in the long run. It all depends on looking at the trends and what your risk tolerance is. The level 3 entry is the last and final entry signal of the 3 that we've discussed today. Now with this one, the only difference is that we are looking for price to actually retrace and test our 200 moving average. Once we get our first candle that tests the 200 moving average, we then take our line and mark the low of that candle. When we get a break below this low, we then look to enter our short position. It doesn't happen quite at the next bar, or actually the next bar, but it takes 45 minutes, which is just 3 bars later, to break the low. This means it's giving us a perfect short entry and a perfect level 3. A few things that we need to keep in mind when trading the level 3 entry. Because this is a much deeper pullback than just to testing the 100 moving average, we need to keep in mind that at any moment the trend could actually reverse, and in this case could turn bullish. That's why with the level 3 entry, we do not want to see the price make higher highs past the candle that entered the zone and touched the 200 moving average. In this case, we make an exception on the next candle, which is this one, because there's no close above the high of that candle that originally tested our 200 moving average. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Don't take our word for it. Look through the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.